All right, everybody, welcome to Cyber Bulls. There are so many things that are impacting Tesla's stock and the company, of course. We're just 3 days after the pay package debacle that's happened. We're going to find out how folks thinking about this has changed. And then we're going to compare Tesla to all the other Mag 7 companies. They've just dropped their earnings call. So we've got the Bulls with us, and we have a special guest, Larry Goldberg. Larry, you were one person that we turned to right after the pay package came out. You had an initial thinking. How did that change over the course of the day?
I think that everybody has come to the conclusion that Elon's going to stay with the company. Elon's going to fight this. I think if you just simply look at the support that Elon got in the original pay package and continues to win amongst the shareholders, I think he wins this battle. I think everybody regards this as just a bump in the road. They're pretty sure they're going to figure it out. It's going to cost money, but I'm not sure that the money is as important as establishing the principle. And the principle is going to be, getting this company with all the disclosures to support Elon in the pay package that he had, that we believed he had, and that he in fact had, despite this court case. So I think, the moment I saw this finding by the magistrate, I tweeted that we're in for a lot of excitement. But as it turned out, the market's kind of absorbed it, and we're just moving on. And I think that's probably the wisest thing to do, which doesn't mean to say that action shouldn't be taken, which doesn't mean to say that action won't be taken. But I think the market's taking it in its stride because just judging by Elon's fighting reaction, we feel pretty confident. I think the market feels pretty confident that the relationship between Elon and Tesla is not going to be disturbed.
The company and the product. Don't look at the quarterly stock movement.
As a trader, I got to take some off the table and wait for a better price.
A very realistic bull, questioning certain decisions.
The rational bull. We enjoy listening to bears.
Looking for the red flags. You're supposed to react.
Wonderful. Yeah. So there is actually a couple things that happened right after this event that occurred, right? The first thing was Elon immediately said that we need to incorporate into Texas. He put out this poll. 87% of people said, yes, Tesla should change its state of incorporation to Texas. And then he pretty well quickly said the public vote is unequivocally in favor of Texas. So that seems to be happening. In addition to that, I know that Alexandra has a proposal to talk to as well. So before we get there, do you guys want to address what do you think has happened? How's your thinking changed since the last few days? Who wants to go next?
I'll jump in. I'm still very bitter about this anti-capitalism part of it. As you could see, the reaction is pretty swift. I mean, I think Delaware is going to be in very big trouble from the perspective of who's going to want to incorporate there if they're going to overturn agreements that shareholders voted on. To say that this was beneficial to shareholders, it's still ludicrous to me because even if you take out Elon and Kimball's shares, you're still over 70% voted. To say that we don't know that the board is not at arm's length or whatever, the impartial board. I mean, everybody understands the nature of the relationships. The reality is that this was an outlandish pay package. It was for performance, and Elon was willing to take it, and he delivered. So and I understand that they're going to change it, but then you have attorneys like Warren was saying that he thinks that they will have we're going to vote on it again and everything will be fine, but then this firm is going to get like $5 billion because of the way that it previously worked. It's 15%. But then, like, how does that make sense? Because you have, it's going to be a zero delta between what, I don't think shareholders are going to save any money here. If anything, it sounds like it's going to cost shareholders money for law firms and fees and all of that. So I just think like this judge overstepping, made up her mind on how she wanted to handle it, and then to find out that it was also the same judge that presided over the X the forced Elon's hand to buy it after he wanted to back out. I just think it smells fishy, and I really don't like it that we're not letting capitalism do its thing. And yeah,
it's a big topic. Jeff, how did your thinking change?
Yeah, I mean, since the time this was announced, I'm in alignment with Larry of it. Elon is fighting this. He's all of his tweet, all of his commentary is more of like, okay, as we move on, like what direction should we move into in terms of incorporating the company and so forth. I've always said that this was a battle for Elon's future. We were always talking about Elon's future compensation package. We were even talking about the prior one. We thought this was a given. But I always thought this was about a battle for Elon's time. He's an asset. He's got a value in the industry. He's got a value in doing AI with XAI. He's got a value in doing space with SpaceX. We can name off all the other different companies, Neuralink. And if you're Tesla and you're the Tesla board, this is a battle for Elon's time. So your number one asset had his pay package, rescinded, whatever the terminology is. And I'm surprised to not see a statement, a supportive statement, something from the board that was put out there, very just, out there that the following morning of we completely disavow this ruling. We stand behind Elon. I'm surprised that we didn't see anything. And maybe there's something that could be missing in that. And maybe there's optics there, but I'm surprised that there wasn't a statement there. But in terms of like where we sit today, I do think Elon wants to figure out like how do we get to the next step, and I think the board also does as well. It'd be great to understand like at some point, soon where they're at in doing that, and then if finally just the way this whole thing went down, it just where's the victim to this crime? I'm just trying to understand. And I know it's not a criminal case, I get it, but where's the somebody there was a lawsuit where's the victim?
Case, Jeff. It is a tort case. So who's been damaged here is the question you're asking.
And that's what I was getting to. Yeah, and that's what I was getting to exactly, Larry. It just when I was just looking at since 2018, the stock is up 10x. So if this was a court case on benefit of the shareholders, well, the shareholders are 10x richer. If they were a shareholder at the time and they voted on this case, they put their dollars behind Tesla. They have 10 times the amount of dollars, and there's very few investments, if any, that would match that. So that's where I leave this. It's still strange to me, like how this could happen in America. There's all kinds of commentary. In terms of like, the judge, nobody should do anything with the judge. Just understand, like, is there bias and how do we move on from here as a company? And is there something, the other thing is, as we move forward, Delaware, other different states, what are the pros and cons? It's not all green. The grass isn't green on the other side. So I think as a shareholder, I think everybody's kind of like committed to jump from Delaware, but to what is what I'd be interested in. So finally, I think Elon's constructive. I'd like to hear more from the board in terms of support. I don't understand who the victim is of this court case. And I'd love to understand a little bit more of like the money behind it and who funded this. But as we move forward, what are we jumping to, and what does it look like is kind of what's in my, is in front of me right now.
I'd like to follow on with that, Jeff. A couple of things. The first is there were a few tweets today tracing the history of this magistrate. And it has to be said, she is an ex-partner of the law firm that is headed by the current governor of the state of Delaware. The current governor of the state of Delaware owes his fealty to this president. This president said from the podium of the White House that Elon should be looked into. Now, the whole court case rests, the whole opinion rests on the issue of disclosure of the relationship between the directors and Elon Musk. And yet we have a magistrate sitting in judgment, sole judgment of a case where it now appears he has a relationship, a political relationship, as well as a professional relationship with political forces in power that are opposed to Elon Musk. So disclosures go both ways. And the optics on this are terrible. I'll say one other thing. Everybody knows, I mean, in detail, about Elon's relationship with his directors. This has been a tortured subject for years. Every new director that joins the board has been looked at in great detail. And, you know, to say that the chairman of this company is a, quote, friend of Elon is stretching, you know, the rubber band beyond breaking point. I mean, I just know this person's history and background and stature in the industry, in this industry, and internationally, and it's just it beggars imagination. So I'm very frustrated. I think that this is just the beginning of a very deep, a very big fight, and I think that it needs to be addressed.
Yes. So previously, you guys were mentioning that on the initial reaction that they should just move on, but now I think do we agree that there will be a fight? They will go to the Supreme Delaware Court?
Well, that's an open issue. I think we're not lawyers, but I did hear from, you know, our internal community lawyer, Warren, that there are some reasons, or actually other lawyers too, who feel that there are reasons why we may not, Elon may not want to appeal this. I think that's an open issue. The biggest reason to appeal, and the most important reason to appeal, is that the company's on the hook for about $5 to $7 billion of costs here. And that's, you know, we, the shareholders, are the victims here. And we're not the victims of Elon Musk because, boy, was there full disclosure. I mean, they're saying they didn't disclose the fact that he was friends with those shareholders, with those directors. Come on. Everybody knew the relationship, even if it wasn't disclosed in writing on those papers. And I feel that they didn't disclose it because the relationship has been open for so many years. But the people who are going to suffer here are the shareholders, and the company's going to be bereft of some $5 billion.
Yeah, 1% of the company is going to a legal firm.
Yes.
Well, in my view, the judge should have recused herself, right? I mean, in a normal case, the second she got this, if there was this political link, if there was this clear statement of the current administration against Elon, she should have recused herself.
Yeah.
Probably that should have been the reaction of the attorneys, of the Tesla attorneys. But I mean, again, that was 2018. We didn't have this president yet. And I don't remember when the hearings ended. They ended in 22. No, I think so. Well, it is what it is. But there's certainly a very particular conflict. Now, I wanted to address what Jeff said about the board. I think the board cannot legally state anything yet. We don't have the final verdict, right? She's still writing that. And on the other hand,
no, we do have the final verdict.
We do.
Yeah,
I think there's still something to be waited.
They're waiting for the two parties to come up with
exactly. There's this period to go, and then she has to statute on a couple of points that are not statute yet. So I think
we don't have. Yeah, I mean, we have the final verdict. She's not going to change this.
Well, there's certain points that are not clear yet.
Yeah, I wasn't saying like a detailed statement from the board of like where we go next, but more of like we support.
Okay.
The number one asset in the company.
Yeah. And my point is actually that the board, in my view, and I think there are a lot of people joining me on this one, has been working on both the new compensation plan and the plan B, if ever this verdict would be as negative as it is now. I mean, no company of this size doesn't anticipate certain of these things, right? They obviously hope for the best, but prepare for the worst. So this plan B needs action from the board. And when you know you have to now move, you have to now statue on certain things, I don't think you want to rush into it. Then the other thing I wanted to add that we learned. So first, I want to have a big shout out to Amy, SF Tao, who reached out 2 days ago because she felt us shareholders should show our support and bring forward a shareholder proposal. The initial initiative was to try to go as quickly as possible so that we could put it into the proxy that will be sent out for the next shareholder meeting. So she reached out to IR, who told her we're already too late. We're already too late for the normal procedure to get it in. There may still be, we're in contact with lawyer, there may still be a way to accelerate that and have an exception to include it with a delay, but it's very unlikely. So our main strategy now is to present it as a letter to the board. So exactly, thank you very much for showing this, Herbert. So we started last night with writing these 3 points, one being leaving Delaware to Texas. And while we were writing it, Elon confirmed that he will have a shareholder vote on that. So we changed that to just being a support to that vote. The second is to reaffirm the previous 2018 compensation plan. And the third one, to put a new one in it in the same type of structure than it is, with a couple of examples. None of those are written in stone. It's just, some how we should tackle that. And Elon eventually getting to 25+%. That can also be reached in different ways. By the way, Texas has the possibility of dual shares easier than Delaware. We got that confirmed by one of the lawyers. So one of the benefits of going to Texas may be that 2 share classes can be introduced, even though we're post IPO. So there are a couple of things still floating, and it's not up to us shareholders to point to it. That is exactly the board's message, and that's what I wanted to state to Jeff. They are in the middle of a lot of decisions to be made. So our only intent in making people sign for this shareholder letter, again, initially it was hopefully to get into the proxy. That's why we needed quite a lot of information. So this started all yesterday, but at the same time that we're taping in. So we're about 24 hours in. And we collected the information that we would need to get into a proxy. We had to take a decision. Do we go for as much information as needed, or do we only go for a little bit of information? And we said, well, maybe we can get into that proxy, so may as well have all the information. So now, not even 24 hours later, 2,000 people signed up. I mean, this is absolutely mind-boggling, because, what other community do you have where you put one post on X and then 2,000 people are prepared to put their name, their address, their stock holdings, their option holdings, whether they were stockholders in 2018, whether they voted in 2018. I mean, incredible depth of information, prepared that if ever this would need to be published, which is not sure yet, they would agree to that. So I found that absolutely astonishing. And these 2,000 shareholders represent at the moment about 5.5 million shares. So this is not negligible. Very proud of this community. Thank you very much for everybody. And thank you to Amy for having taken the initiative.
I think that's one of the incredible things about this community is people do a lot of research, the retail community, and there's people like you and Amy and you who will do the effort to make this happen. And the retail investor has a place, right? Whether it's just a letter to the board or it's actually, put forth something in the proxy statement for the next shareholder meeting. These are incredible. I mean, this is the kind of things that the retailers are standing up and saying, this is what we want. And maybe there's a way for us to actually make a statement to the judge representing shareholders too, something like that. But I guess this is how it's done. Yeah.
And fun fact, that's an average of 2,750 shares per person.
Mm-hmm. Okay. Well, this is
Probably exactly what Gary is holding in his fund.
I wasn't gonna make
I
that
actually think it is the number. I do that every day. I think that is the number.
All right. Well, this is an evolving story. We'll keep an eye on this, but it's obviously it can actually turn out to be a positive, right? It can actually turn into, like you said, well, I'm going to move to Texas. Well, Texas allows me to dual share. Like these things could actually be a good thing.
Delaware also allows a dual shareholder, so it's a question of, you have to reincorporate. So I don't know. I mean, this is legal stuff way over my.
Yeah, I mean, the one lawyer we talked about, and again, it's there's so many opinions on it, and I have to say I'm sort of tired of having everybody give their opinion. But one thing was very interesting. There were two plans that I found particularly standing out. One was creating a holding structure and merge the Delaware structure into this new holding structure, and the holding structure would have dual shares. That was something that wasn't as that possible in Delaware. So I don't know whether it would be possible in Nevada or Wyoming, but in Texas, this lawyer had checked it out. Thought that was interesting because it sort of made this whole move, the technical word is domestication, from you go from one domicile to the other one. And actually the word in Texas, because Texas does everything differently, is conversion. So Delaware allows companies to leave. Now, that sounds easier than it is. I went into the Delaware law and I actually tweeted that one. There are certain conditions. And Elon, I think it was Elon, actually tweeted today about somebody who can't get out of Delaware, because Delaware can make it actually complicated for you to get out. But in principle, in their law, they say very clearly you can leave it. And Texas is one of the states that allows you to enter. They're not all the states. California makes it quite simple as well, but there are quite a lot of states that don't allow the conversion. They want you to dissolve in the old state and reincorporate in the new state. So Texas, I'm getting there. Texas allows this maneuver, and it also allows the merger at the same time. Again, there are not all the states that allow the merger at the same time, then you do the conversion. So that was one of the ideas. The other one was to just leave it as it is and profit from the whole thing, to do now a post-IPO second share class with voting rights only. Not sure how that would work and whether it could still work, but after that lawyer who's only in security law said that is possible, needs SEC approval. Not only shareholder approval, but SEC approval.
Do we see Elon moving his other companies, if they were incorporated at Delaware, out?
That's funny.
Well?
There seems to be a movement for SpaceX, but I'm not a SpaceX investor, so maybe Larry knows more.
No, I'm a SpaceX investor, but I wouldn't. I don't think that SpaceX are going to talk about what they do before they do it. They're going to do it and then tell us. And by the way, SpaceX are far, far more secretive than Tesla, several orders of magnitude more secretive.
Yeah, it's an interesting thought. Anyway, I think there may be more here coming.
Public company is not simple, right? I mean, it brings advantages. I listened to a video a couple of weeks ago with JB Straubel, who was asked whether he would now bring Redwood public. And he said, well, we're not there at all yet. We have lots of milestones to get. But on one side, I really miss the contact with the retail investors. This Tesla crowd is so passionate and there's so much exchange and it brings good stuff. But there's also so much that you have to comply to and disclose and whatever when you're a public company. It's a pain in the butt.
Yeah, I found it interesting that like Jason Calacanis came out and said that they form 100 companies or whatever the post said, and they will no longer do that and stand with Elon. Do you guys have any experience on that? Would you return to Delaware?
I'm an investor with quite a number of Jason Calacanis's companies, and he really has it down. It's pretty automated. There've been a few glitches, but it's a pretty automated process. and they're all, of course, Delaware LLCs. And that's very different from a public company. Very different from a public company. We stopped incorporating in Delaware about 11 years ago. When in 2007, when I formed Knowledge Partners Incorporated, we were strongly advised not to incorporate in Delaware by our attorneys, and we ended up incorporating in the state of North Carolina, one company, in the state of New Jersey, another company, because there was no specific advantage anymore in incorporating in Delaware. That they have the depth of the law, but really that applies, I think, to companies where you want to keep secret the shareholders, and many states now allow you to. Certainly Wyoming does, and Utah and Nevada. Nevada and Utah allow you to.
No, Nevada, you have to file an annual report with the name of the shareholders and LLC members. It's only Wyoming and Delaware, yeah.
And Utah, I think. Utah is the other one. Utah is very, very popular for offshore companies. I happen to know that quite as well. But anyway, the point is that, this has come as a shock to a lot of people. And, some people will just say, oh, it's because it's Elon, blah, blah, blah. But for those people who read this opinion, she writes with a lot of verve. She writes beautifully. I think she was a philosophy major, and she writes beautifully with a little touch of humor. But the first line of this opinion says it all. The first sentence she says is, "Was the richest person in the world overpaid?" I mean, that's really, really borderline. Yeah, anyway, it is what it is.
And I think what happened to Delaware is what happened actually to a lot of America. And I say that as a foreigner who immigrated here. So I may be wrong, and please correct me then. But I feel America drifted really in two parts. There is a much clearer political direction on the right and on the left, and you have the feeling this center needs to take part. And so while I know Delaware from about 20 years ago, because when I was in Europe, it was very, very fashionable to set up an LLC in Delaware because you had the anonymity, right? You had nearly no problem, not getting this to known in your European state, whatever. You just did it in Delaware, and Delaware was set up for that. They set you up with bank accounts and everything. You never had to put a foot into the United States. You had your company, your registered agent, your bank account, and everything that came with it. And that's what started this whole industry, because once you had the smaller LLCs, you also got the corporations. I remember I don't know which election it was, whether it was 2008 or 2016. But they then even found the Clinton foundations in Delaware and all that. There are lots of reasons to go to Delaware. But like everything else, it's become, the courts have become more partisan. And this is one of the first big, clearly politically motivated judgments. And people that went to Delaware because they appreciated this entrepreneur-friendly environment, cost anonymous, and also asset protection and a favorable court system. Well, when you have to list all that down, if you don't have the court system anymore as an entrepreneur, you then do your partisan choice. And the partisan choice may be to go to a red state because you just feel more proximity to that way of thinking. I was actually reminded of this yesterday. Remember when the X situation became quite nasty, and I don't remember who it was, but somebody was accused by Elon of using advertisers to influence advertisers to leave X, and then he was going to bring that to court. And he was court shopping in Texas for X to know which judge he wanted on these cases. I can find it back, but it was in the heat of all this free speech movement and advertisers leaving and blah blah blah. Is that we're gonna sue these middle people that are lobbying against us and are trying to get the advertisers up, and we're gonna go to this and this court because we're gonna have that and that judge, and that's, you know, he does it one way and other people do it the other way.
All right. I think that was good coverage. Well, there's going to be a lot more. Let's talk about, you know, how Tesla compares to the other Mag 7. Clearly, there is a lot of headwinds that Elon specifically has to, you know, fight through. And there seems like the world is against him, right? You've got the big auto, big media, you got the big oil going after him. And now it looks like there's even the government maybe is setting things up. But in the other way, another kind of the other side, when you look at the other, the Mag 7, they seem to be just, you know, playing the cards right. They just reported their earnings. We're going to talk a little bit about that. And then, you know, Elon has to position Tesla as an AI company. And this came out recently here. It says $500 million of investment in a data center that it's going to run Dojo near Buffalo, New York, near Niagara Falls. Is that enough? Do you guys think that is a first step? He himself, Elon, said that that's not enough, right? That is, you know, that's just a kind of just one bit, but at least they're moving forward. And he confirmed that they've got NVIDIA chips, they've got AMD chips, now they've got their Dojo chips. Jeff, do you want to make a comment on this? And do you think that this is enough of a move compared to the others?
Well, I mean, if you look at their moves in terms of headcount, if you look at their moves in terms of capital spend, they're increasing their capital spend. They're up there, you know, in the upper echelon in terms of capital spend. They're going to keep going. They're not in a retrenchment mode. There's all this commentary about, you know, EV and what's happening to it, but they're clearly not in a retrenchment mode. They've made their factories bigger. They're kicking off new factories. They're increasing the size of their data centers. So they're clearly going for it. None of us outside of Tesla understand their compute efficiency and how much they should be spending. And is this enough? Is this too much? Is this too little? I've got to trust the experts inside of Tesla. And I do like seeing that they're not only are they increasing the size of existing facilities, they're also kicking off new ones. So, I mean, my takeaway is when I look at what they're doing with labor and I look at in terms of hiring people and talent, and I look at what they're doing in terms of capital, they're clearly getting ready for another cycle of growth. And the question is when and how much?
All right.
Yeah, I guess the question is, let me tie it to the second topic, the third topic here is like, you know, there's Kramer talking about, should Tesla be moved off Mag 7? So there's been this AI boom that's been happening since beginning of last year. And the Mag 7, they all seem to be just taking advantage of it. They talk about AI. Everybody's got their data centers. They're investing significant billions. Here's Tesla doing everything you're saying, Jeff, but they're not being given nobody's talking about Tesla as an AI company. And in fact, the performance of the stock is making people feel like maybe they don't belong, which none of us here believe that that's the case. I'm just saying that that's kind of the sentiment, the thinking. Yeah. Anybody want to comment on that?
I'll key off of my prior comments. So in terms of how Tesla's perceived with the Mag 7, it's kind of a mixed bag. If you look at the Mag 7 outside of NVIDIA, it looks like Microsoft put up some decent earnings numbers, but in general, they're you know, single digit, maybe low double digit growth in terms of the other Mag 7, again outside of NVIDIA. And then you look at Tesla and you look at their revenue growth, their EPS growth has been shrinking. But they're, you know, in terms of growing the size of that pie in the company, you know, Tesla's clearly outstripping them in growth. Their PEG ratio, which is really looking at their PE coupled with their growth, is in the top half of the Mag 7. So when you put all these factors together, they're actually doing well. The problem with Tesla is they're not telling the AI story well enough to put them in the AI category. And they're being naturally compared to auto companies that have single-digit PEs. Now, if you look and double-click on those auto companies, they have single-digit PEs, and they've got flat to negative, real growth. If you deconstruct the GM earnings announcement, I mean, they're down in gross margin, they're down in operating profits. I mean, they're really low levels, single digit levels. And, if you look at their revenue growth, whether it's pre-COVID to now, I mean, they're putting up big revenue numbers, $40 billion in a quarter. So they're putting up big numbers. But in terms of growth, you're not getting growth in any of these companies. So that's the problem with Tesla. They haven't fully told the AI story. By the way, I firmly believe that Tesla AI, my experience in a Tesla vehicle versus my experience sitting in front of a language model, I get better performance and more real world capability in a Tesla vehicle on full self-driving than I do sitting in front of ChatGPT-4 or some of these other competitive offerings. But that story is not being told. And not only is Tesla, maybe the CEO is not well liked by the media, the stock is also kind of turned off in terms of being well liked by people that talk about stocks. And that can be part of it. So, and if you're not showing the EPS growth and you're not telling the story that would put you firmly in that AI category publicly, or you're getting great earnings off of it, it's going to be a tough hill to climb until they have some massive surprise quarter where they put up some amazing print, and then the sentiment maybe could start changing.
Yeah, I just interviewed Dan Ives, and that I'm going to drop that interview this weekend. And Dan Ives, a Wedbush Security institutional investor in Tesla, he's saying that for Tesla to be seen as an AI company by investors, you have to tell a story. He's totally on board with you. He thinks that Tesla's communication is just something that frustrates him so much. But B, it needs to be something that is tied to monetization, some sort of monetization future that they can see. All the other Mag 7s, they seem to be able to show how they're making money with AI, and Tesla needs to kind of communicate that better.
I'm not sure where the money's being made in AI yet. So I'm looking at Amazon, Microsoft, Google. Microsoft putting up good numbers because they're telling a very good story, but I'm not seeing product in the marketplace earning money yet. I mean, I'm hearing a hell of a lot of stories. This is not unusual. I think it's we're about to hit the sort of downturn in the level of excitement's at a peak. This always precedes a collapse into the valley of despond. I think we're about a year away from hitting that valley, and that'll be roughly the time that Tesla starts speaking. Look, Tesla are earning real money from their AI in FSD revenue. That FSD revenue is a source of pain as well as a source of income, because people are waiting for the full FSD, but in the meantime, they're getting huge value out of the FSD that they're using. I know I am. So I get the frustration with the optics of it all, but the applications that Tesla are pursuing with its AI, and I'm not talking about XAI, I'm talking about Tesla, are related to mechanical devices, whether it's Optimus or the car. And that's the focus of Tesla's AI, and those products embed the AI, and it's those products that will be, coming. And I keep saying, I know I've talked everybody bored with this talk, but that's coming in the 25, 26 timeframe. But it's real. All the stuff we hear from Microsoft, all the stuff we hear from NVIDIA, this is all, wow, isn't it incredible? But where are the dollars from the applications that they're selling? Don't see them yet.
Yeah, I agree in large part. I just NVIDIA though, there are, there's real dollars from.
Yeah,
they're selling hardware. I'm talking about their soft. I'm talking about the applications that come from this incredible amount of money that's going to the hardware. I have no doubt it'll come, but I'm not sure it'll come from Microsoft or from the platforms. I don't know yet.
Well,
Yeah.
Microsoft is selling their cloud services, right? So it's like an NVIDIA selling you the chip and the hardware, but then the actual cloud service coming
Cloud services need an application to pay for the cloud services. I mean, I know Mike's company is using Microsoft's cloud services and their AI, we're actually seeing some sales now, but we're not yet in that adoption phase where it becomes clear what the money is going to be and how much it's going to be. So, this is a hype cycle we're in. We're in the midst of the hype cycle. I've lived through it 10 times in my lifetime, and the results are always more startling, and the outcome than what you see, what is apparent when you go into it.
So this is the interesting dichotomy, right? So Tesla is missing the hype cycle that's happening, but Tesla actually has the real potential products that can actually impact and actually generate revenue, but it's not there yet. And so, but then more likely that's the one that's going to show up first. So we'll see what happens.
The hype cycle goes to the roof at the outset, and then you have this slough of despond when people, get real. And then you start seeing the reality. Well, Tesla's been up and down, and they're in the mode of developing that reality.
Yeah,
it's a little bit more complicated than that.
Larry, that's what I was going to say. Is Tesla, to be fair, has already experienced the hype cycle, and now they have to deliver. And like I had a drive today. It was 20 minutes each way. Full FSD, left turns, right turns, through neighborhoods, kids running with a roundabout, and I didn't have to intervene. It is really, really good. Is it there yet? Is it V12? Remove the beta label? No, we're not there yet, but that's coming. And as soon as Tesla can deliver, just like ChatGPT, where you have or any one of these, Bard and all of those guys, where you pay a fee. Only early adopters really are willing to pay a fee, but that's going to come, right? As that beta label gets removed, that'll happen. You're saying 25 or 26.
Yeah, but I just going back. Oh, sorry.
No.
I was just saying, going back to Herbert's question. I mean, we have NVIDIA left. I think they'll report at the end of the month. NVIDIA when they guide, they're very deep into their order cycle. They have 52-week lead time for the H100. They sell a bunch of other GPUs. They have super long lead times. So when they guide, they really understand their order book. They really understand their production. They'd have to have a major production snafu. By the way, they don't build anything. One of their partners would have to have a major production snafu for them to miss. So, I think they're in a good position. AMD has to ramp. Their I believe it's MI300, their AI hardware solution. But the one thing people forget about NVIDIA is one of the things that makes their solution sticky. First off, they're first, and they've got more supply. But they have a software platform called CUDA that ships with their silicon, so you can actually do app development on it. You can actually do engine software development on it and run. The question is are a bunch of processors going to be just converting to GPU instructions, and are they actually ushering in the next kind of compute revolution? So, there's a lot more there than just their hardware they're shipping. I think their software platform's extremely sticky. Where I think Tesla could have a deep advantage to NVIDIA's, Tesla has that outreach all the way to the consumer. So they do the complete system design starting from the consumer all the way back to the base layer of silicon with Pete Bannon's team. They do their own software for their own silicon. They do everything that NVIDIA does. If NVIDIA sells an inference chip to Mercedes-Benz, Tesla does everything that NVIDIA does with designing the silicon, writing the software, the base software that runs in it, and any software that runs in the vehicle for that silicon. They do all of that. The difference with Tesla is they own the customer, they own all of their data, and they're doing the complete end-to-end integration. which can involve safety, it can involve reliability, it can involve everything. Whereas NVIDIA's got to work with multiple partners. How is NVIDIA going to be prioritized? I know we're going a little bit down a rat hole, but I think Tesla has the ability to emerge from this very strong, going back to their vertically integrated approach. It just has to play out. They have to be able to tell a story. AI days, if you're going to have a recruiting day, have a recruiting day. I think it was great for Tesla, and they should do more of them. But you also have to have a day where you tell the AI story where analysts can actually understand it and understand like where things are going. But I think Tesla understands this. It's more about when and how they want to execute.
Jeff, they're very poor at communicating that, largely because they're feeling their way. I mean, the way they deliver a product is they deliver a product that they believe people will love, and if they love it, then so be it. You're exactly right about NVIDIA, and actually I exclude NVIDIA from my earlier remarks. NVIDIA are delivering hardware, and they are really delivering real product, and they are winning. They're killing it. And, they are ahead of the software by a year or two. The interesting thing about NVIDIA is that delivering solutions as well, AI solutions embedded in their chip, such as the chip for the inference chip for the car, inferencing for the car, and inferencing for the bot. And people are taking that up, and Tesla going their own way. So that's the complexity of the story of NVIDIA. But I'm really talking about the AI guys who ChatGPT, for example. We're in the early phases of actually implementing ChatGPT in applications because it's unclear about when it's lying and when it's not lying. They have technical terms for it, but it lies. It lies with a straight face. It's a brilliant liar, actually. But it does, and there's a lot of work to be done in the straightforward AI applications. And so, sorry.
Sorry, I thought you were done. NVIDIA makes their own chips, meaning they have a fab? Is that correct? No, they outsource it.
No. And this is where I think if you were to poll 95 out of 100 analysts, they would have no idea that Tesla does AI chip design and software for AI, and they have it running in 5 and 6 million products, worldwide. I think if you polled 95 out of 100 analysts, they would not know that.
Right. That's exactly.
This is where Elon's saying that if Dojo works, and if it does work, this is a massive business. So what do you guys think is causing the biggest reason why people are not investing in Tesla right now? I hear a lot of chatter about it's Elon. Now, I also hear the other side, right? The reason I'm investing in Tesla is because of Elon, but a lot of things he's doing is causing a lot of concern for a lot of people. This is uninvestable because Elon is just a wild card. That's one group. And the other group is what you said, Xander, right? Which is, Tesla needs to deliver. They're an auto company. I need to see earnings. And then it's enough of these. I'm tired of these stories of hearing about the bots coming, the FSDs coming. I just need to see it happen. Otherwise, there's no reason to invest in it today. Which of those two, or maybe there's others, do you think is the greatest reason that's stopping people from just throwing more money at Tesla?
Yeah, something I was going to say earlier, I think there's a lot of, rotation that occurs, right? Where is the money flowing? There's still a lot of money on the sideline, right? We had the Fed speak yesterday. We're recording this on a Thursday. So Fed speak yesterday, and, the market has to price out that the 50% chance that they had plus percent that they would lower rates, that's got to come out. So you're seeing that. But now with Meta announcing dividends and buybacks, their stock is up 14%. So there's, why is it up 14% after hours? Well, money's flowing in there. Where's it going to come from? It's going to come from the company hasn't delivered on earnings. in the same way. And of course, we could talk about Google and Apple and Microsoft and all of those guys, and Amazon announced today. So I think that there's going to come a point where Larry was kind of alluding to it, where that you can have the AI.com bubble, that it can burst at some point. And if Tesla is, in my opinion, if Tesla is on the right path and starts, those margins start coming back up, deliveries, all of those things, I think the money will flow back, because we're gonna, you're gonna want to appreciate your capital. So for now, I think it's just a break on Tesla. But for the current shareholders, honestly, I'm happy about it, because I'm not done growing the position, and I kind of like that the opportunity. But I also want to know that that Elon is going to be compensated. He's gonna have he's the jockey that I literally bet the houses on. So I invested because of I'm a 2019 grow position person. So that compensation package was a signal to me that is where the company is going. That's where the puck is going to go. So I want to know the same thing now. And I think that once hopefully Elon does his vision casting, this is now after the 10Q or the 10K. So I'm hoping that story starts to shift. But you're going to need the combination of things where he's not the worst person in the world, and this narrative. And I just to close with this, I really don't like this narrative of billionaire bad. This is America. If you do well, you get rewarded for it, and if the company is going to deliver, they will get rewarded for it. Ultimately, capitalism will prevail.
Wise words.
Thanks.
How about you two? You guys have an answer to my question?
Yeah, we're in the middle of, we're between waves. I mean, I just turn back to what Elon said. We're between waves. Now, if the pandemic didn't happen, maybe they would have had the next gen earlier. I doubt it somehow. I remember some people telling me on the day that they announced, the investor conference, and they talked about next gen, they said, oh, we're going to see next gen next week. It didn't happen, and it's going to take another year, and we're in between. And so I'm 77. I have the patience to wait another year and a half. You kids should actually, you should, go out and have fun. And when we're back here next year, it'll be, golden age. So yeah, I'm a Xander. I'm there. I'm ready.
Who agrees with that statement that next year, let's say February 1st of 2025, it's going to be the golden age for Tesla, or is it going to be just wait for another year? I think the year that Alexandra would have said is 2026. That's when you actually see real numbers from the compact car. You see real numbers from Cybertruck. You're going to actually see the bot being sold. You're going to see the FSD more likely to be already on its way. Personally, I think it's going to happen by next year because of the bot. I think the bot's going to be sold. It won't generate as much numbers, but it just needs to generate $1. You know what I'm saying? A small amount of money. Then people can see the monetization and where this headed, because it's such a massive opportunity that once people see that this has a useful work, it has the ability to be trained, it's got the hardware pretty design locked, maybe another version coming out, but that's enough for people to start making bigger bets. I don't think you need to wait till the actual earnings per share.
You're too pessimistic.
That's just my own opinion.
You're too pessimistic about next gen. Next gen,
I'm too pessimistic.
We will see the car early next year.
Yeah.
We will also have a delivery date early next year.
Yeah.
I mean, they're far along. The factory, they're only about 6 months away from having that factory ready, in my personal judgment. I mean, just based upon what I see Joe putting up by way of videos. But I don't know what you think, Jeff. I don't know what you probably know better than I, or guess better than I.
Yeah, maybe you're a bit over optimistic. I think you're on the right track. I think 2025, they should be revealing the vehicle. I think that message, that leaked in Reuters, and then what they followed up on the earnings call was the broader supply base going into production in the middle part of the year. And you do that if you're going to be in vehicle production SOP for General Assembly in the second half of the year. So these things happen in stages. Every part doesn't start in the same date. The electrical supply base will probably start in the first part of the year. So yeah, I think it's going to be a catalyst. And this is the thing with
Jeff,
Tesla.
Sorry, I don't mean to interrupt you, but I was talking about the presentation to say, here it is, this is the car, just as they did with every car they've had.
That doesn't move the stock. That's not a catalyst for stock. You need to see it being sold.
I don't think so. I think that this car is going to bring an enormous amount of excitement.
Yeah, it's hard to predict these things. I'm a little bit more in the camp of Herbert. I think they have to approach this one differently. They're going to have to, when they do the reveal, and I think Tesla's getting wise to this too. Of like every time they show like everything up, people just go run and copy it. So I hope they clamp down a little bit on the information. But I think the reveal and the production need to be more closely tied together. I do think that it's going to happen in 2025. When you send RFQs out to suppliers, you have an initial design for each of those components. So that to me is a level of maturity better than seeing a prototype that's made out of wood and cement and other pieces of metal. I'd much rather see the RFQs go out to suppliers. So I think parts of the supply base start in the first half, parts start in the middle, and I think they're in production in the second half. That's a likely scenario. Maybe they pull it in, but you've got an all new manufacturing system that they've got to basically design from the ground up, and then they have to go tool up with their automation suppliers, and then they've got to get that debugged. And this is not a car where you want to reveal it and say, oh, by the way, when you go order it, you have a 9-month wait time for it. They really want to get production up and going. They really want to get, I think they want to get vehicles in inventory to me, and then do the reveal. But that's a matter of opinion. But back to the whole original question was: the year 2025? Are there some big triggers for the stock? I think the answer is yes. And this is why the stock is very tricky. You can't get too cute and say, "Hey, thing's going to be on autopilot all year." Jump out and then think you can time it and jump back in. I think you could miss some very big days, and so that's a difficult part of this stock. But I mean, when you go through earnings cycles where you have sequentially declining EPS, and until this quarter you had sequentially declining gross margins, your revenue growth is declining, and then you don't put guidance out, even though I think that they're going to grow between 10 and 20%. I think they're going to do as well as any other mega cap besides NVIDIA in terms of growth. And I actually think that they're going to have sequentially improving gross margins. Is it going to be every quarter? Maybe not, but I do think that they're on a trajectory where I think they're going to align their price. As long as they align their price cuts inside of their COGS decline curve, they're going to have sequentially growing gross margins. So I think there's a much better story here. But it ultimately, the optics of the call really put a damper on the stock, and then everybody just in a line just went and took their price targets down. Some did downgrades, and I think those optics could be managed differently. So now Tesla turned themselves into a show me story instead of being able to say like, we think we're going to do this, or they're not even saying it. So now it's like they actually have to go put the print in, and then maybe the stock will react. But just fast forward to April. What if gross margins are sequentially improving again? What if deliveries are near 500,000? I think it sends a message to the marketplace, but we'll see.
Yeah, I think there was a reaction with the lack of a guide, right? And that now you have other companies that aren't guiding as well. I won't name any names, and but I think that ultimately the market is going to be forward looking, and I think Jeff used that word. The trajectory. If the earnings per share start climbing, and you know the price is announced of it. Not that it maybe will be this price, but here's the price. Here's what you're getting. Then the market can start modeling that in on what they think the deliveries will be like, because the reality is if you're going to deliver a car that's that inexpensive, the take rate is going to be tremendous.
And I have a question. Are they going to take Apple out of the Magnificent Seven now?
Why?
Apple's taking a real hit tonight.
So I'll tell you the answer to that. No. And the reason is Apple, if you look at how they've positioned themselves, both with the ad media and with fintech media, they are, and analysts actually, they get negative pressure if they downgrade the stock or they put a sell on, or if they do anything with their PT. Those analysts, they get a lot of abuse. This is what I'm hearing from other analyst, and they really, I mean, you saw a lot of the CNBC personnel that had Vision Pro, they were given previews of the Vision Pro. I mean, they really go out of their way to court financial media, and of course they spend a lot of money on ads. So whether they're in or out of the Mag 7, I don't know how that's just some terminology. Yeah. But I mean, they did break this trend, I think, of 3 or 4 quarters of declining growth. But I think they're getting hit because they had double-digit decline in China, and really every category besides iPhone had a sequential decline. They've got legal issues with the watch, so they're going to have to really tell a story here, I guess, during this earnings call regarding guidance. Now they don't guide on units. But they will guide on the total quarter, so that'll be interesting to see. And then, how does Vision Pro do? And are they going to take those billions of iOS devices and have a real language model, have an Apple AI solution running on those billions of devices? I think there's a couple of things out there that could really spur the stock, but there's also a lot more negatives of late.
Okay, I've got a question for you guys, the panel. So everybody's talking about the Mag 7, right? Which Tesla is there. And then you got Jim Cramer saying, hey, it should only be the Super 6. It's kicked Tesla out. They've been falling out of the favor. But there's many of us who say, well, there's going to be eventually a Super 1. That Tesla possibly has an opportunity to just blow everybody away. Not just the largest company in the world, right? Could be double the largest company in the world. Could be triple the largest company if the bot happens and that really happens well. Now, that's total, guessing and total, what's the word? Hopium on my part, right? Who here actually thinks that is an actual real possibility?
Possibility, yeah, sure.
Tesla 10 trillion.
The question is the next question has to be is what's the probability?
Okay. And then of course, there's also the other corollary, which is there's going to be other companies. Let's say OpenAI and DeepMind, they just nail AGI. They have something so amazing. They could become a $5-10 trillion company if AGI happens. So
Yeah, the talk about $5 and $10 trillion companies. I mean, you got to think about what is the GDP of the whole world, and we're now starting to chew up the GDP of the world. There are limits, although the GDP could grow very dramatically if we actually do achieve AGI, and if the bot is very successful. Tesla is tied for the most part to mechanical devices that have to be manufactured. So you actually have to put those atoms together. And so that, is a limitation versus Microsoft.
Well, let me push back a little bit on that. That is the case today. But if you listen carefully to what Elon's saying, they have Vision AI, which is anything with a camera. They could sell their software to turn anything with a camera into something useful. So the example that James Dalma gave was like if you had a swimming pool and you have a camera facing a swimming pool, right now that is dumb. It doesn't know if it's your child swimming and they're just happily splashing away, or if it's somebody was actually pushed in and they're actually drowning. Is it a dog? Is it a bear? What is it happening? If you use Tesla's vision AI, it could identify what's happening. It can know, it can alert things. It can actually even make actions. And it's just a camera. And that's it. That's all you need.
Yeah, I mean, there's no doubt about it. But, I'm talking about what there
today.
is today, where we are today. But look, I get very uncomfortable when we start talking in the trillions. I really, although, I mean, Microsoft is there. It's taken them a few years to get there. And they've had one or two hiccups. But it's an exciting period. I don't think I can remember a time this exciting. I really can't. I mean, in 50 plus years, 55 years in the software industry, I just don't remember a time this exciting. And we've been through some exciting times. And I don't think we've seen as exciting companies that we have right now that, this Magnificent Seven is truly magnificent. Each one has, reason to be very exciting. I find, though, that, when I look at Tesla's R&D expenditure and I compare it to the rest of the Magnificent Seven, it just boggles my mind. It boggles my mind. And, I wish I had a chance to speak to this chancellor in the court, because when you have a company that is churning out the kind of research, the kind of products that they're turning out, and they have, this $5 billion of R&D expenditure, and you compare it to those with $35 billion of R&D, the magic is just extraordinary, and the management really turns down to. It is Elon. There's no doubt about it. And if you understand this company, it is Elon. I mean, I heard Jeff talk about supply chain and manufacturing excellence, but I'm really focused on this R&D, because the way he approaches R&D, the way the company approaches R&D, is saving us $20 billion a year. I mean, how do they do it? It's extraordinary.
The area that I'm very interested in right now, I don't think I'll find the answers to it, but what's the most likely, the probable path to AGI? And there's several stories that Tesla has, and if you either believe it or you don't, right? So the step is vision AI is more important than language AI. Can language AI become AGI? Maybe, right? But vision AI with embodied AI, that's the bet. And then if you have embodied AI, can you just do it with just a couple, with 100, with 1,000, or do you need millions of bots out there, millions of interacting to the real world before AGI happens? And then do you need all that data, all that number of bots out there? And if those stories are true, and then you need the data centers, like before you will get there, you need massive compute, massive. And if you add all of that up together, and that's what is required for AGI, then Tesla has the pole position and has the lead to get there. If you can just get to AGI using the LLMs, OpenAI right now, and existing computers, and just feeding it with YouTube videos, then it's a race between that versus that. But that's what our bet is, that you require this much to get there.
Jan LeCun once said, AGI, Jan LeCun is one of the foremost AI investigators. He works for Meta. He once said that AGI is kind of like a mountaintop. That when you get to that mountaintop, you see what you didn't see when you were looking at the mountaintop. There's a higher mountain behind it.
Yeah.
We just don't know how many mountains there are behind the one that's behind it. So I'm reluctant to talk about AGI. I want to talk about what we can see today. And I think what we can see today is Tesla has a really, really good shot at delivering the bot FSD, in the 25K car. And that's good enough for me, because those three things we're talking about, very, very
5
large.
5 trillion company.
And I'll tell you this other bet that Tesla made, which is on manufacturing. I think if you look at Tesla, I think they're going to turn into this AI and manufacturing company. You hear AI robotics, but I think you also hear this undertone of manufacturing in all of them. And I spend a fair amount of time with some of the, with some of the biggest companies, and I have visibility to a lot of what's going on in supply chain and manufacturing, and they're really operating at a kind of at a different level. I can describe it on multiple different metrics, but if you just compare them to the auto industry and how they manufacture cars, I was just looking at the BYD inventory today, 72 days of inventory. And if you just look at it at inventory, we don't talk about it. All the commentary on in Twitter or X about inventory is like, is there too much or there too little? Is it growing or not growing? If you look at it comparatively with other car companies, what they do with cash coming in and going out, that cash conversion cycle is unparalleled. They have the cash conversion cycle actually of an electronics company, even better, quite frankly, than most electronics companies. And they're actually moving these huge chunks of mass, multi-ton chunks of mass faster than companies who make phones and watches and so forth. They're actually moving that inventory faster. And I just can't tell you, once that scales, whether it scales with wheels or it scales with legs, and they're doing the core silicon on the hardware side of that as well. Once all of that scales together, there's not going to be anybody else that can keep up with it. They're not developing that acumen right now. And if somebody wants to come on the scene and open AI and say, "Hey, we're gonna lead here," where's that tradition? Where's that ground in manufacturing that they have? They really don't have it. So where are they going to get it from? It's really hard to say. And some of the companies that you think are superior at doing hardware don't own their own factories. And really have cost structures where if they had relevant competition in what they're doing, they would be in real trouble. There's just not enough said about this other undercurrent that they have under all this work they're doing with AI, which is their ability to actually to scale it into things that people use or will use every day.
And those are all the reasons why I think we have to have a little bit of patience and let them, get this next wave out. And I think whether the wave comes in January of 2025 or November of 2025 or December of 2025, I think 25 is going to be a formative year. I think 2026 we will look back on as another 2018, 2020 period.
Yeah. Your question of can Tesla go to 10 trillion? I just think about, some of these basic things that Elon has said, things like the machine that builds the machine. And, Jeff was just talking about that. Does Tesla go into mining? Well, they can't seem to get enough supply from the world. So then they start addressing parts of the mining supply chain. And correct me if I'm wrong in any of this, Jeff. Do they make a fab and do they make their own silicon? Do they enter that world? Or, and if the answer is no, Jeff, I'd love to, feel free to.
No, you're on the right track. None of these mega cap companies own an automation, a factory automation firm. Yeah. They don't know. Tesla went and bought that a few years ago. Tesla doesn't have a silicon fab. But
can they?
Apple does have a fab, but fabs are a really bad idea.
Apple's fabless. They fab with TSMC, Samsung, everywhere else.
I think they do some experimental work in a fab. That's actually what I was told by an ex-Apple guy. But maybe. But I think a fab is a really, really, really bad idea. Yeah. And I've said this before. People were trying to talk about Tesla creating a fab back in the short.
Don't need to. You get into something where you think you'd have differentiated output from it, and if you can't, then you try to stay kind of one step above it. So if it's lithium mine, if they were getting squeezed both on supply and on cost with the conversion of lithium carbide to hydroxide. So they said, okay, we're going to get in the middle of that mining operation and the conversion operation. And oh, by the way, we think we have a better solution for using recycled material, and we think we can take the whole cost structure down. So when Tesla enters a particular category, they want to own the technology because they think they can actually do it much better, but they also want to have a volume knob on the others that are in that. So think of batteries, think of potentially mining here, and think of what they're doing with AI chips as well. They want to have their fingers on the volume knob. So if they get squeezed by a partner, or quite frankly, when they're having a cost negotiation and say, look, I have 10 million of these I'm going to buy in the next year. I can make a third of them myself, or I can make 10% of them myself. You're going to help me answer that question based on what we can do at the negotiating table. And it just completely changes the negotiating dynamic for these major foundational elements, whether it's silicon, whether it's raw materials, or whether it's the conversion of the final product. It completely changes it. So that's why they're doing it. They're not trying to crush every other battery manufacturer. They're not trying to crush everybody that's doing AI. They know they need them, but it really puts a proper light on the negotiating side of it, and it puts Tesla in an advantage that none of the others will really have.
What he said.
I love it. Okay, well, this was good. Very powerful conversation. We covered quite a bit of ground. It sounds like Tesla is one of those things that you just have to wait a little bit because there is a hype engine, like you said earlier. We got through the hype, but, foundations being placed. And all of these things need to come through. Thank you guys very much. That's the Cyber Bulls. We do this every week. Thank you. See you soon. And thank you, Larry. Appreciate you joining us this week.
Thank you.
Thanks.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.